Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, May 8th, and the S&P once again gave us a bounce. What was the lows from the 7th? That remember, overnight it got as low as 1342 or so. Today we got down to 1343.75, which ended up being a great buying opportunity. I have to say, via volume profile, I had a nice run on that, on buying the bottom there, and ended up to be very profitable, and ended up being a really good day. So what we now see is really, given that we've had two impressive days in a row, what we have is a range, an inside range, or I should say an inside day, which means today's volume is engulfed by the prior day. And until we break out of this range, you would have to say that the bias should remain to the downside, just because that's where we're coming from. The pressure of the sellers right now is still over controlling. We are in the middle half of the range as we currently speak, so that's something to be aware of. If we bounce here and move above today's highs, there's probably a strong argument that this point of control level matters, 1342 for the year, and we could see really a push back up towards 1400. I don't think it's out of the cards, so be aware of that and be opportunistic. Don't overload to the long side because it's really not worth it. But let the market tell you what it's going to do. The only thing we have today is a market that tells us for 2 days in a row the selling pressure has stopped here. Normally that is the precursor to a continuation move to the upside. So we are just waiting for confirmation. So one thing to do is stick with what's working, really. Being long the dollar is still working. Being short the euro is still working. Press those trades. There's no reason to let off the gas here. We're falling off from this important point of control level. This probably has more room to go, and I can only assume 128 or so on the euro is coming pretty soon. ConocoPhillips, which shows up goofy on Thinkorswim, looking at it here on this chart, we've had two strong days in a row. I said I bought the 52.5 calls yesterday in last night's video. Guess what's working for me, which allows me to participate in the long side with now a cheap bet. And because I defined my risk yesterday, saying yesterday looked like the lows, I'm being rewarded for taking on that risk. Therefore, I should manage it properly. I should basically thank the market for agreeing with my thesis. Therefore, I don't lose money and enjoy what the market gives me. However, around 55 or so, I'm looking to take these 52.5 calls up or off. Maybe exchange it for like a 57 or 55 by 57.5 call spread, and risk a little more money there, but lock in the profits from the 52.5s. The point is, I want to be careful, and I want to respect both sides of the market right now, and I don't want to overpress my bet one way. Too much, that is. Gold broke down key levels today. Guess what? I went from being long gold. I'm still long gold, but what I did was I hedged up. It wasn't worth it to me to remain long gold naked with just a few side positions going on. So what I did, I immediately went out on the GLD, going out not this Friday's expiration, but the Friday after. I bought the 156 by 154 call spread. It was like 65 cents. So essentially, it protects me for the foreseeable downside before what would expect it to be a bounce level. Now I'll look at that position tomorrow, that spread, and if it's profitable, what I may do is take this spread off and reassess. Maybe if we get a bounce on gold, reassess to put on another put spread to continue to protect my downside. However, Gold's at its value area low for the year, and I'll bring up the future so you can see. Uh, the last few times we've been here, what have happened? And I'm specifically going to draw the value area, 1581. If you just look at events, what has happened? Explosion to the upside, explosion to the upside, explosion to the upside. Do I need to say anything else? I'm not saying to pile in, but what I'm saying is look for reversal. If you're short gold, realize we're at the bottom end of the range where it's been the right time to take that position off. But at the same time, it's also been right to shift from bull to bear. From bear to bull on gold, where you've seen two consecutive times, really three, a push up north of 1750 into the 1800 range. Just to point out, oil continues to move lower. I think this is nothing but good news for the economy, which means overall, it's going to make me more bullish on stocks and make me want to be involved on names that do very well, when gas prices come in, and that's just something to be aware of. So, an example, and I'm just using this as a pure example, something like Starbucks, if it gets beat down anymore, it's going to be worth a look. McDonald's, 200-day moving average. When was the last time it's touched this? Let's find out. Oh, I know. The last time it was a great buying opportunity to buy McDonald's. Don't take this off your radar. Just because McDonald's has done here what it did before, it also led to, hold on, stick with me. It led to a great buying opportunity. I'm not saying pile in here, but I'm saying we're probably closer to a floor on McDonald's than any type of potential ceiling. I'm not saying that McDonald's just goes up from here, but what I'm saying is expect some type of consolidation and then a potential breakout to the upside. That's what I would be playing for, and until it breaks the 200-day moving average, I don't think you take your eye off that ball. If that means, just to add to it, if that means just going out tomorrow and buying 10 shares, do it. And then place your stop 1% below the 200-day moving average. So the 200-day moving average is at, 93.55. I think that's where it's at. Maybe that's today's close. Who cares? 92.83. Okay, sorry for that. That was really bad. But so put a stop below 92. If you get stopped out, you get stopped out. But the last time price was at the 200-day moving average, it was good for a move from 73 up to 100. So a 30% move, and it's pretty easy to hold that. So I'm not saying there's another 30% move in McDonald's, but what I am saying is you're at a low risk, high probability opportunity, and the first target I would be looking at is the 50-day moving average. Okay, Caterpillar, I really think you have to buy this and keep a stop below today's intraday low. And you're at the point of control for the last 2 years. Put your stop at, say, $93. You're giving up $3.50, but in reality, I think the upside is north of 105, which means you're at about a 3-to-1 reward to risk ratio. I think that's worth it. If it was me, I would either be buying the 95 by 105 call spreads or the 100 by 105. I'd go out probably to June, and let's see if we get a bounce on Caterpillar, because it looks like we are, and it's going to be a tradable one. One thing to note, when Caterpillar was at these levels, it was resistance, then it was a breakout. Now we came back into that level, but I like the fact the point of control for the 2 years is here. Moreover, the point of control for the year will be there tomorrow if we trade anywhere around 96, which is only 49 cents lower than current levels. So just be aware of that. Pepsi, keep your eye on this. Still in the upper half of the channel. You just want to see this start to break out to the upside. If we do that, we should see follow-on buying. I would urge to add to your positions at that time. and watch this move higher. If we break below, and this is just the way I see it, if we break below these current lows, sub 65.75 or so, take some of the position off. There's no need to have that risk if you can buy it 1% or so lower. Remember, it's a slow mover. You're not hitting a home run, you're hitting a base hit, but that's what we need in this type of market right now, except for the, the opportunities, the short-term opportunities we get in like a Caterpillar. Just to show Caterpillar's other half, Deere, bouncing off the 200-day, could be a higher low. Now, this is important stuff. Pay attention. This could be, what you have is a series of successful lows that were good, if you, assuming, if you bought for tradable bounces. Now, there's small bounces, but nevertheless, they would have been profitable. We break down for 2 or 3 days, recover, come back down to test the same level that's been holding, and it holds for a nice move back to the upside. Now we're here again. So what, it's either going to be we roll over, we make a lower high somewhere and roll over. We don't make any kind of lower high. We just break through and kind of keep going, or we get to the top end of the channel and perhaps break out, which makes this one-day wonder a defining moment in Deere, and you're seeing higher prices. So if you're a believer in this, now earnings come out on the 16th, it appears, but if you're a believer in this, you place your stop below today's intraday low, and you're looking for the top of the channel. So just be aware of that opportunity. Merck, bouncing off the point of control for the year. This was kind of the opportunity I was waiting for. So now we just want to see some follow through. I like the strength in this. I like the fact that it really didn't get beat up over the past couple of days like the rest of the market has. It got beat up a little bit, but nothing like the overall market. Procter & Gamble, keep your eye on this. Continues to trade in this range. Still looking for it to break above the 64.75 level or so. That was these most recent highs. See it start pushing up towards 66, where I have a few targets set to take some profits. If it breaks below these current lows, I'm just going to take the position off, or take the majority of it off, and kind of watch it from there. XLF holding this support level, but didn't really give us a bounce today that we were looking for. If you look at a name like Bank of America, it got beat up today. Goldman Sachs hung in there. JP Morgan, really I think the lower JP Morgan goes more towards 40, the more interested I am in buying. We have pretty good volume there, which I consider important. I wouldn't be willing to make a bet on it until it stabilizes, though. Wells Fargo, consolidating up here, but I don't think something you want to get involved in. Let it tell you it's going higher before buying this right here. Just my opinion. Maybe you feel different and have more confidence in Wells Fargo's potential in the next quarter or two. But I'm just going to wait for the price action to tell me. Berkshire, I think this is something that you could buy despite Warren Buffett's prostate cancer. I was buying it yesterday. I bought more today. My reference point is really this most recent low. And if we come back to those levels, I may even buy more. But I do like this. If there is any economic pickup with gas prices going lower, this is my way of playing it. And I'm going to stick with it. They're buying back stock, which is good. Even Warren Buffett says they're buying stock every day. So that puts confidence in shareholders, and it makes them feel that their stock is undervalued, and therefore they're happy to buy more. Johnson & Johnson, I still think you can buy it here. It's going to break out and move slightly higher at some point. It's been moving sideways for so long. I think if you're buying right at the 200-day moving average, you're okay. It's such a slow mover. You're really going for the dividend and the ability to write covered calls against it and gain some income. But I wouldn't just have it as part of your allocation and use it like a money market. If you like GE, you look at today's low and you find it interesting because it's at the point of control of the year, right at this 19 level. This is a name, if you believe in, you can start getting involved here. We're right at the bottom end of the support where it's been right to be a buyer. You also have some potential of a head and shoulders. You have a massive top on the 28th of March, a high of 21, and the next couple days we didn't get as high as say 2015. So you have major resistance basically at the 20 level, which is proven. So you potentially have some type of head and shoulders pattern. The measured move going from 21 down to say 19 would be $2. That would lead you basically where the stock originally broke out the end of last year. So just be aware that if it does start to break, sellers would be looking at that level as a potential target. Apple, just to say something about it, here's the daily chart. Really at the bottom end of the range. Let's look at it a little more in detail. 558, let's call it. That's major support. That was the low today. You can define your risk and place your stop under today's low. Look for a move higher. However, it would be tough to say you should be selling into strength rather than buying weakness just based off of this volume here. 580 looks like it would be stubborn resistance, and that would be a level to sell off of to the short side. With that said, it is Apple, and Apple, generally speaking, it's a lot easier to make money from Apple on the long side than the short side. Now, with that said, the only thing that you can do is either go long. As far as action, if you believe that Apple's bottoming and this is a potential double bottom or whatever, go long. You can either place your stop under 554 or so, which was the low from the 24th, or you can place your stop below today's intraday low, say by $1 or something. But what you'd be saying is, we have ZIG, and then you had earnings, ZAG, and then you have ZIG. So what do you get next? You get some sort of ZAG. Remember that 580 is potential resistance. It was support for a day, then it broke through. It was support back here, then it broke through. It was support here and it kept going. So 580 matters, and be aware of that. Be aware of the opportunity. If you aren't sure and there's nothing wrong with this, then don't take a position. If you own one share in Apple just to stay involved, that's fine. That's probably what a lot of fund managers have right now. I know, generally speaking, that's kind of what I have. I have a small position in Apple that I'm just kind of holding, waiting for the opportunity to add back to it, because I don't think that 644 is the high in Apple. I still believe in the story, and if anything, at least I own it from $100 lower, so where I can at least take advantage of that dividend, and I can add to it, maybe turn Apple into, like a lot of other positions, a covered call type position. So really, that's all I have to say there. Okay, I'd like to talk about the VIX, and that's it. The VIX, this 21 level still resistance, but once again, we're above the 50-day. We have a higher low here. People are willing to buy insurance on pretty much any dip here, which is important to realize, and important. It's probably telling us that the market has a little more downside in it. If that's the case, just be aware, protect yourself. There's nothing wrong with holding a lot of cash. Really, the way I'm holding a lot of cash is by being short a lot of euros, and the rest of my portfolio is lightly allocated. Say 30% invested, if that, and it's just something to be aware of. I don't think there's a lot of opportunity in the market right now, and if there is, it's for something like Caterpillar, which looks like it's going to be for a $5 to $8 bounce, something like that. So take care, have a good night. I'll talk to you tomorrow.